No surprises here that PBOC is not over-egging the stimulus. It is targeted. How effective do you reckon this triple R cut is going to be?
Well, it sends an interesting positive signal, but liquidity is hardly a constraint on lending in China today, so the triple R cut itself doesn't really change the outlook. It perhaps gives banks a little bit more scope to invest in bonds issued by the higher quality property developers in China. But I think the message here is that the policymakers are beginning to get a little bit anxious that maybe the economy is slowing down too quickly. We have by the end of this year, we'll have the big economic conference, and maybe by March we'll have more clarity on what kinds of fiscal support, I think, is what we're going to get ultimately to try to boost growth a little bit. But the real story for 2022 is going to be just the cyclical recovery in the Chinese economy, including in the property market, which we think by Q2 next year will have bottomed out.
Where does this put the headline forecasts for 2022, Michael?
2022 growth is going to come in, we think, just a touch above 5% from something just below 8% this year. But within the year, this quarter currently, we're thinking growth is around 3% year on year. And by the end of next year, we'll be looking at something close to 6% growth. Meanwhile, growth in the US and Europe, which are today growing faster than China, which is highly unusual, obviously, by the middle of next year, that will have rebalanced. And once again, investors will be looking at this region for growth, whereas for the last 6 or 9 months, if you want to buy growth, you're buying the US and Europe.
Does this triple R cut, the second one this year, does it open the door to a bit of an easing bias by the PBOC, or do they wait to see the effects of this latest triple R cut percolate through the economy first before moving?
I think it is an expression of an easing bias. They're clearly fine-tuning, if you will, monetary policy. They don't want to cut interest rates, and that would unleash. They would worry that unleashes a broader increase in credit growth. They very clearly want to continue to delever the Chinese economy. So triple R cut, as I said, sends a message that we care, that we want to make sure that liquidity isn't a constraint anywhere in the system. But the truth is it isn't. So it's maybe a positive message. The real story, I think, in terms of policy is this year, fiscal policy has been a surprising drag on growth. Fiscal deficits come down much faster than we'd expected. And we think certainly that won't be repeated next year. In fact, we could see maybe a little bit of easing on the fiscal side.